So today we're going to be taking a look at my M1 Finance dividend investing portfolio. We're going to kind of break down what my next deposit is going to be and also kind of looking at some of the performance of these different individual stocks that I have in my portfolio. Before we do that though, just want to let you guys know if you're interested in signing up with this platform that I'm using, which is M1 Finance, I'll have a link for them in the show notes down below. They are running a cool promotion where if you open up the account and make a $1,000 deposit, you get a nice $30 bonus for opening up that account, which is great because one, that gets you started in with actually getting invested, and it gets you a nice little bonus that, will go towards your future investments and can really have a huge impact for you because, of course, compounding that money will be really effective for you. So let's go ahead and I'm going to shrink myself over here so we can kind of just take a look at this portfolio. Now, what you're going to see here, of course, my name here is the Dividend Dentist Portfolio, just because this account is mainly focused on dividends. I do also have a retirement account, and I do also have just kind of a more riskier account with Robinhood as well. So the way we're going to do this is kind of take a look at this account all together. You can see that my total in this portfolio is around $20,318. Just last week, I hit over that $20,000 marker, which is huge. That's a big milestone. And I always like to, of course, preface it with the fact that 2 years ago, almost to the date here, I actually started with $100 in this account. And I slowly started understanding how my investment strategy was going to go because it wasn't pretty much the way it is today for the first couple months. You can see that just over time, I started adding more and more. And then once I kind of got more comfortable and more solidified with my portfolio, I went ahead and actually started really investing a lot more, and it keeps kind of going up from here. I think at this point, I'm pretty much going at $250 a week in this portfolio. I let M1 Finance kind of do its thing for the most part. So in my trades here, I'll kind of go on that in just 1 second. But I mainly let it kind of do its own thing. So if we take a look at the performance of this portfolio, the last day didn't do as well. We were down about $84 in there. If we look at the last week, we were down about $350, but no worries, because when the account is going down or in the negative like this, I actually don't mind. I end up buying even more if I can sometimes because I like to dollar cost average, or what you might hear as DCA. So I'm not really too fearful in that regard. If we go look at the last month, in total, we've made almost $560. So really positive still in the last month, even with this last week not being as great. And if we look at the quarter, we're almost up $1,900. Now, this is money weighted return, so I'll show you guys in a second my unrealized gains. And then we can see here in the last year, we have over $3,680. So this does include any stocks that I sold for a profit and kept the money in the account, or dividends that I have earned thus far, which you can see here, total earned dividends is $224. Some of that is not paid out yet, but it is still pending to come into the account. And then my all-time about $3,800, which is really cool. So I'm very excited for that. And just kind of a brief heads up here for the 1 year marker back in January 2020, you can see right here, my account was sitting at $1,300. So to be sitting up here at $20,000 is a pretty awesome feat. I can only imagine where this account's going to go in the next couple of years. I do have some ideas, and I'll show you guys in my dividend calculator. So right now, you guys can see I have 746, just making sure it's still on the screen here. So 746 is what we have, and that is actually just from dividends that were earned over the last couple of days. So I'll show you guys that here in just 1 sec, because I think going over my dividends is huge for me personally. So we're going to be in our activities. I'm going to cut down to just dividends. So if we just look at what we've earned so far in January, right here, you can see the first one was on January 4th for ADP. Came in twice, but essentially equaled out to what we were expecting. The first one being 71 cents and the second one being $1.86. Then on the 7th, we got paid out from Pepsi for $2.61. And then on the 15th, we got two different payouts right over here. One from DLR for $4.62, and then one from Realty Income for $2.83. So pretty healthy dividends there. I'm pretty excited for it. All of that, of course, is being reinvested. If I jump over to my tab here, I'm going to actually zoom in here for 1 sec. So this is my dividend spreadsheet that I made a little while ago. If you're interested in it, you could get it for free in my show notes down below. It'll just have a link to my website for you. Right over here, you can see in total for January thus far, because we still have another dividend or two to get paid out, we have made $12.63. Now, the really cool thing about this is when we compare it to January of 2020, we made $2.39. And then the year before that, we actually hadn't earned any dividends yet. So just in the 1 year thus far from last year is a huge, huge increase. So right now we are definitely on track to have a really great year, because even when you consider that in 2020, the very first quarter of the year, we only made a total of $9.63. So just in January thus far alone, we are already surpassing what we made in all of Q1 of 2020. So we have a lot of great head start from where we were in 2020 with how much we're earning so far. Obviously, right now, all the rest of the stats here on the sides are just based off of, let me jump kind of back a little bit, like the average, that we're making every month is just so far from this month. The total we've earned from dividends actually fully paid off is 205. You saw the earned dividends earlier. That's money that hasn't been paid out all fully yet too. So just kind of something to keep in mind there, but things are looking pretty good. I mean, you can see here year total, that 1263. So I have a great feeling that we're going to be surpassing the $184 that we made back in 2020 by quite a large margin if we continue to stay on this path. Because the biggest thing, let me zoom back out here a little bit, because the biggest thing for us when it comes to building up a dividend portfolio is staying consistent, right? Because if we stay consistent, not only are we earning those dividends because we're buying more into these different companies, like you could see with Realty Income, DLR, but then they also have dividend increases, which is one of my favorite things when it comes to dividends. I think a lot of people kind of miss that step in the process of learning about dividends. So we'll talk a little bit about them like we do here all the time. But I want to show you here. So I was mentioning that this last week, the portfolio has kind of been down a little bit. So I like to dollar cost average, which is buying more in when the market's down. But a couple weeks ago, DLR, which is the stock right here that I own, was actually down significantly. I think if we go back to the main portfolio, let me take a look here. Right now, DLR, overall, I'm only down 23 cents money weighted return because of the amount of dividends I've earned. So I'm pretty much broken even with this portfolio or with this stock. But a couple of weeks ago, the stock was actually lower than what I originally paid for it. And so what happens is for a lot of people, they start to freak out. They start to say, hey, whoa, I have a stock that's lower than what I originally paid for. I'm losing money. You don't necessarily lose money unless you sold out of the company. So what I want to do is show you here my process. So I'm just going to bring up DLR. This is just all its activity here. So you're going to see a pattern here if I kind of jump around. So the last dividend you saw I just earned was 462. If I look for the other dividend prior, I think it's on the next page. Let me go over and check. So yeah, so here's the other dividend that I got paid out. So September 30th, obviously from last quarter, it was $1.95. So a huge increase from the time before. So the thing I want to show you here is right over at this part right here. So there's a segment here where you're going to see, $70, $22, $40, $30. So around this time right over here, so let me kind of try to match them up right over here. So around this time, DLR was actually down in my portfolio. So they were actually less value than where I originally bought them at. So if, let's say my average cost was like $130, they were trading for $120 or $115, something like that. That's just an example. But what I saw was the opportunity to buy more. So I put in a lot of more money. $70 is a significant amount when you consider the fact that on average I was putting 7, 10, these smaller amounts in every single week, but I saw the opportunity to put more in because it was down, but I still believe that long term it was going to go up. So let me go ahead and go on to seekingalpha.com. So you can kind of see on this chart right over here. So around that November timeframe, December timeframe, right over here, it's kind of close with the numbers, but a little off. So their actual low points was around 130, where their high points is about $160. So, when they were up here, I was still buying, but in smaller quantities. But as it started going down, I started buying more and more. And I think my $70 was, let me see, when was the $70? December 11th. So let's find December 11th. So December 11th, $130, which is fairly close to its low, besides, obviously back in February and March of 2020. But it was fairly close to its lowest point, and now it's kind of going up and down, and it's back to about $136. So what I'm trying to get at is the fact that just because the stock has gone lower than what you originally paid for, if you're planning to hold it very long term, that just gives you more opportunity to buy at a really good price point and dollar cost average. Hey, look, there's an ad for M1 Finance. So again, if you guys are interested in M1 Finance, this little ad right over here, if you guys are interested, check out the link in the show notes down below. That does give you that $30 bonus. It does also help support out the channel so I can continue to provide free content like this for you guys, and it is much appreciated. Let me know what you guys think. When it comes to dollar cost averaging, are you somebody who does that as well? I'm a big fan of dollar cost averaging. So it looks like Seeking Alpha just changed up their website a little bit here. So their dividend summary right over here for DLR is right over here. So their dividend yield is $3.28. What I like to show people is yield on cost. Actually, let me jump back over here for a second. Perfect. That way it didn't time me out. So yield on cost, let me go over the last, can I do a little bit more than a month? Okay. So yield on cost right over here. This kind of gives us a really brief description of like what you're buying into at the price point of the stock and how much of a yield you're getting. So for example, when the stock was at its highest point around October time, or like that $160 we talked about, the dividend yield was about 2.83%. And then at December 11th, when I bought in for that $70, plus obviously all the times in between that as well, you can see that the dividend yield was 3.44%. So that means that I obviously not only got the stock price at a much better price, but the yield at a much better price because of the fact that, the stock price was going down, so the yield went up. Now, hopefully over time, the stock goes up in price for value, so that way I get, obviously that gain if I sell, but I also make sure that the yield that I paid for at that time obviously will stay there, because even though the price goes up on a stock, that means the yield goes down over time, but whatever price I bought it at, actually, that's the cost that I have for my dividends. So one really important thing is, just in case it's a little confusing for people, right now, the dividend yield is at 3.28%. If the stock keeps going up, that yield goes down. But what helps kind of keep the yield on cost moving up for a lot of people is the dividend growth rate. So like right over here, we can see that DLR has a dividend growth rate of about 5.67%. And let's go ahead and take a look at the dividend history right over here. And let's just take a look. Nope, not this one. Dividend news. So let's see here. The last time they raised their dividend was back in February of 2020. So they'll actually potentially be raising their dividend here again soon. And they raised it by 3.7%. So wherever you bought it at before and they raised that dividend, you're essentially getting a nice pay raise, and your yield on cost is also going up, which is really cool. And that helps a lot when it comes to building up your dividend portfolio. So when we talk about, how much we've earned in dividends, how much we've built up in our dividends, if companies are raising that dividend yield every single year, hopefully that's the case and at a good, healthy amount, we're going to start seeing more money coming in, even if we're not investing as much. Obviously, if you can be investing more, that just is going to amplify things even more so for you. But I think it's really cool when companies do their dividend increases. So I'm going to show you guys a calculator here in just a little bit. But what I also want to do is go through and show you some of my upcoming trades on this account. So these are all, let me make sure they're on screen. These are all the different sectors that I have with M1 Finance. All these little like bluish teal dots that you see over here, these things just mean that I'm doing some manual buys, and I'll show you what that entails. Everything else is just kind of automatic for me too. So if we go into view details here, just kind of an example here. So out of the $250 plus the dividends that I earned, which was about $7 and some change recently, all that's going to be invested the next morning. So you can see here a good chunk of that's going to go into my ETF. So that is the Vanguard VOO fund. I am also buying a decent amount into Lockheed Martin. This is a manual buy for me. Anytime it's anything with an exact number, it's usually a manual buy. But I'm buying quite a bit into this one just because, like DLR, they are also currently down in my portfolio, so I want to buy more while they are currently down. You can see here with Apple, I am putting about $23 in. Costco, this one was the M1 Finance doing its thing and putting $20.32 in there. Still buying a decent amount into DLR personally myself at $20. And then Procter & Gamble getting about $15.03. I did a manual buy into Facebook because they're kind of down right now. So I did about 15 there. We got ADP with 10 and a couple other ones here with 10 like Amazon, Google, Microsoft, Next Era Energy, Pepsi. And we got a few little smaller ones like $7 and less with Ross, Tesla, Hasbro. And it's kind of out of picture, but Home Depot right there at the very bottom with a couple of bucks as well. So I mentioned Lockheed Martin. So if I delete all that stuff there. So if I go into my industries and energy, I go into Lockheed Martin, what you're going to see here is the average price that I pay per share is $3.64, and the average price is about $347 as a price point. So you can see there's a significant difference between what I'm paying on average and what the actual market price is. So I'm down pretty significant amounts as far as percentage, but obviously dollar amount, I don't have a lot in this account. I only have about $600 in value. But that just means that if I buy more into this price point now, my average dollar cost is going to go down, which is great. I'm getting a better yield than I originally was intending for this stock. And then when the market goes back up over time for this stock, I'm going to get that better price point, which means I'm going to have more growth, which means more income for the dividends and more value for the unrealized gains as well. So I was doing that again also with Lockheed Martin, similar to that DLR portfolio stock you saw earlier. So what I want to show you guys here too, and this is really important, is my dividend tracker right here. The dividend reinvestment calculator is what I meant. Sorry, and kind of show you guys what some of my goals are here. So I'm going to put right now we're at $20,300, and then right now every single month we're putting in about $1,000 at this point with $250 a week. My current dividend yield is about 2.23%, I believe. And then the dividend growth, this is how on average my dividends are growing. Going to be a little conservative here and put about 9%. And then my annual share price for stocks, I'm going to be very conservative here and put 8%. And then for years, I'm going to put 20 years. And so what we're going to do here is kind of take a look and see how this portfolio is going to grow over the next couple of years, because this is really important for people who maybe don't pay attention as much to dividend growth. So remember, we put about 9% for dividend growth. So what happens is in about 5 years, we're expected to make about $2,800 in dividends in a single year, which is pretty awesome. And our portfolio is estimated to be about $89,000, which is fantastic, right? But let's go ahead and jump another 5 years. So in 10 years, we're going to be sitting around $11,000, which is going to be very close to that first goal that most people have, which is earning about $1,000 a month in dividends. That's about year 10, give or take. And you can see here, our portfolio will sit about $240,000. So right at the cusp of $250,000 in just this account. And then if we jump over to another 5 years, this is where stuff gets really, really good. We're going to be sitting close to about $40,000 in dividends a year. That's like somebody's salary, but not having to do any additional work for it. So this, of course, is going to be a very healthy amount. And you can see here, we are also going to be having about $570,000 in the account itself. Now, one big caveat I like to always mention to people is in order to get to this $39,000 a year in dividends, I do have to make sure that all the dividends I'm earning throughout all these years, all the next 15 years, are all being reinvested in their portfolio, plus adding in that money that I'm putting in every single week, every single month to continue to grow. Now, in 20 years, this is where it gets very fun. I'd be seeing about $140,000 a year in dividends. Now, I do understand in 20 years, inflation also has an effect on how much that money is worth and what I can do with it. But I'm telling you, $146,000 a year in dividends is going to be better than having no money in dividends every single year too. So just something to keep in mind for those people that kind of like to bring that up when it comes to the value of money. But we'll also be having about almost $1.4 million sitting in that portfolio as well, whether we want to take money out of that or do anything else with it. Now, this isn't a retirement account for M1 Finance. This account right over here that you see with the $20,000, all of this is just a regular taxable account. And the reason for it is because in about 15 years, which is right over here, I will be around 45 or so, and my goal is to have this money used for kind of lifestyle stuff, right? If I want to go traveling, or if I want to do something really fun and I don't want to have to think about it, that's where this money is going to come into play. Now, obviously, that will kind of ruin the opportunity in the 5 years after that to earn $146,000 a year in dividends. But that's what I have retirement for. That's what I have those goals for. Unless in that 15 years I have multiple other sources of income, which I am also kind of going towards as well, then maybe I won't pull this money out. But the opportunity and the freedom to choose whether I want to pull that money out or not will be there for me in about 15 years. Ideally, I would like to get more than the $40,000 a year, but that is all with patience and time and dedication. That's with, checking up on these numbers all the time, making sure they look good, going on to Seeking Alpha and making sure that the companies I'm investing in are, increasing those dividends on a regular basis and making sure that my portfolio is having good growth, month after month, year after year. I think having this account, what I have now with the holdings that I have, I think are going to be great for the long-term goals that I have. But a lot of that is with that patience. It is with making sure that I'm sticking to the course that I want to. Obviously, this is just a dividend portfolio, which means I have other opportunities for growth in other areas. But when it comes to being able to have that freedom of making that choice of using the dividend money or not, I think it's really, really critical, because if we clean this up, like I said, $40,000 a year in just dividends alone, that is huge. That's a good amount of money coming in to be able to spend on anything that you'd like or anything you need, without having to consider a regular job or anything else as well too. So, sticking to that is very important. I think making sure that the companies I'm, having in this portfolio, you can see all of them right over here. All of these companies I have to pay attention to, which is a big reason why I only have 28 positions in my M1 Finance account, because of the fact that there is so much that goes on. So for me, I want to make sure that I can pay attention to these companies, continue to grow with them. I do have some growth stocks like you saw here. You can see Tesla. I also have the likes of obviously Facebook, Google, and Amazon as well. So I can have that growth too. And then I could take some of that potentially and also move it into dividend paying stocks too. So all that to say, keeping up with what I'm doing is very, very important. I think if you are somebody who's wanting to get into dividends, I think M1 Finance is fantastic. That promo we talked about earlier, that does end in February. So February of 21 is when you're going to have that opportunity to make that extra $30 bonus. So make sure you click that link. But beyond just doing that, I think the other really important thing is that you are sticking to making this a very consistent thing, right? You saw when I was investing at the very beginning, I had small amounts, and that's okay if you're in that position too. If you only have a small amount that you can invest in every single week, don't fear that, you can't do it because somebody else is doing more than you. Put $10 a week in. I don't care. That's what I started off with. But what you're doing is building up the endurance to be able to understand better, to learn better, to watch videos like this where you're maybe not really focused in on a certain aspect of investing, but you're just hearing people talk about investing, and that gets you excited, that gets you to learn more, and it gets you to grow not only your portfolio, but your mindset when it comes to investing. And with that said, I actually want you to watch this video right over here so you can actually keep on learning and growing with your investment portfolio. My name is Dennis, and I will see you in that next video.